Hi there, Axia Trader Mike here, reporting from Axia London HQ. Today, I'm going to run you through a short 15-minute TradingView tutorial where I'm going to show you how to set up some templates from scratch that are going to help you evolve not just your day trading game, but also your macro game. We're going to look at two different types of charts. First, we're going to look at static charts. These are the kinds of charts that you're not going to change very often, but are going to help you have a deeper understanding of how the macro view plays into your day-to-day execution. Second, we're going to look at dynamic charts. These are the charts that you might be more familiar with. Things like technical analysis, asset allocation within the stock market, and more. Now, I do want to note that the dynamic charts are going to play directly into your footprint, order flow, and market profile understanding. So for those out there that are familiar with our content, this is going to be very important for you to learn so you can couple that with your other tools. Now, I just want to note as well, please stay until the end of the video as I'll be providing you all with 3 free chart templates from TradingView that you can directly copy into your terminal and use freely. All right, let's get started. So as you can see here, I'm looking at a pretty standard TradingView template, and most of you are going to see this when you open TradingView for the first time. Now, if you are an avid TradingView user, I recommend that you fast forward to the point in the video where it is more valuable to you. Now, again, I'm not going to go step by step here in how to set up TradingView from the basic standpoint. Most of you will be able to figure this out on your own with the time frames available here, symbol search here, and indicators and stylistic selections as such. What I'm going to do now is I'm going to run straight into how I look at the market from a bottom-up view. Now, this is coming from the classic CMT view. For those of you that are not aware, that stands for Chartered Market Technician. Just look it up. You'll know what I'm talking about, just so that you have an idea of where these fundamentals come from. Now, here at Axia, we practice many methodologies and approaches. So again, we leave that up to you, and hopefully you take what you want and leave what you don't. So what I've got here on the top left is a weekly. I've got the 3-hour here. I've got a 15-minute here and a 1-minute here. You can access this by setting up, or you can set up templates by accessing the layout setup above your chart name here. Now, if I go back to the standard view that most of you might see, again, if you just come up here and you click that tile, you can then click whatever tile you want, whatever amount of tile you want. If you click on the unnamed, obviously you will then have the option to rename and save your chart. This will allow you to start collecting different templates and such that you can refer back to as you need. Now, I'll show you how the indication here is running that shows that it's Q4. This is very helpful just to have an understanding of quarterly transitions. As you can see, there's quite a big move there on oil in the quarterly transition, but this is just an indicator that I'm happy to share with you all, which again, I will share this chart with you. I'll leave it in the description below. Actually, I'll be sharing about 4, so this will be one of those 4. With it will come the indicator here that you see, and again, thanks to my public indicator script writers out there on TradingView. And all this does is pretty simple. It just shows you the quarter, and it shades the quarter with the color and the corresponding indicator of the beginning of that quarter. This is very helpful, especially because we are day traders, so understanding when that quarter change is incoming, it can help a lot with time sort of execution, if you will. Now, in regards to this is simply a 3-hour chart. I leave that quarterly indicator on there. This is helpful for a very clean, just technician's view. Again, for those that are unaware, you can use the drawing panel to create a mini toolbar. So as you can see here, I've got my mini toolbar. Again, this is quite easy to do. You simply click the star, and then you will see there whichever indicator you've chosen will appear there. Sorry, whichever tool you've chosen will appear there. So again, just from a very static view, I will give you, a very sort of technician approach. I will give you the official way to draw a trend line, because there's a lot of people out there drawing trend lines, but very few is there a discussion around the proper way to draw a trend line. And again, I'm referring to CMT, Chartered Market Technician Tactics. Now, all things remain constant in the markets, meaning that price action discounts everything. So we use that terminology to assess trends and structures. So in this 3-hour trend that we've experienced from Q4 and on, what we can do is we can change it to line with markers to see where the market has closed. Again, you want to always draw a trend line where the market has closed, not where the bars or the candles have wicked. Okay, so this is a valid trend line. And if you want to use a channel, which is just a different kind of form of that trend analysis, you can do so like so. And then when you switch it back to bars, you understand where things have closed and where things have wicked, right? And this translates well when you start lowering the time frame and you look for those structures. Now, again, this is going to be a lot of artistic licensing, and I leave it to you to set it up how you'd like. This is just so you understand that from a bottom-up view, meaning from the weekly, from the kind of medium-term time frame to the short-term 15-minute and 1-minute, this allows for a very clean view. Now, just notice here at the bottom, I've added some minor indications like the session break, which just shows me where the initial Globex session has started and obviously ended. This is very useful just to see where we are relative to the day by day. And of course, the 1 minute is going to be the most zoomed in. And I will note again, just to step back, you can see that I'm monitoring the volume on all of the 3 time frames except the 1 minute, as the 15-minute will suffice. Great. So again, I will share this in the description for you, and you're welcome to use it as you wish. Now I'm going to move on to a more intraday active chart. This chart is going to focus on the old school pit sort of bar by bar style. So as you can see here on the far left, this is the daily, and this is essentially just to see what the overall structure has been over the year. This is obviously you're not going to look at very often, but it can be useful to remember to zoom out. This chart here is going to break down by the next nearest time frame for a day trader. So what I mean by that is, you see how it says 9 hours? This is a little trick, and anybody that's ever watched any content from me in the Axia sphere, you know that I use these. These are a great way to monitor the 3 important sessions of the day. Okay, so you've got the first session, which is the Globex Open, which obviously is going to be things like Tokyo session, South Korea session, China session. That's going to be indicated by that first 9-hour bar. When that first 9-hour bar ends, it begins with the 8 a.m. UK or 9 a.m. EU cash open. Then this bar actually ends at 5 o'clock UK, which is about 12 p.m. New York. So it's essentially the European session going into the end. And then finally, the third bar is going to be your US session in full. So each 3 bars helps you understand what the market has done relative to the overall picture. So what's interesting to look at is from the NASDAQ's perspective, the 3 bars from Thursday and Friday all show a relatively balanced market, whereas the Wednesday shows a market that shifted value higher and then retained that value for those 2 trading sessions. You can also consider the 3 hours. The 3 hours obviously is just going to be double of 3, so 6 bars instead. And again, this is showing you essentially the same thing, just in a different form. What you can do, if you'd like, is you can take the weighted moving average and you can apply it to your medium-term, long-term time frame to understand when that weighted average is in convergence with price, and when there's negative divergence below the average or positive convergence above the average. This is just to monitor deviations, whether it's a +2, +3, because obviously standard deviations +3 and beyond usually lead to mean reversion. Now, the middle chart here is going to be more for intraday. So, 30-minute, 15-minute, 5-minute. And this, again, you can utilize that weighted moving average to essentially understand when standard deviations are occurring and just to have an understanding of where bar by bar is opening. Now, the final chart here, this one is very useful, and Typically, I'll have this one open separately somewhere in my terminal so that it's nice and wide. And this one's going to be for premium users only. But again, this is a 1 second to 5 second view. You can do ticks, which I'm less keen on. I just prefer the second by second. And if it is tick by tick, it's going to be in special occasions. I do recommend that everybody pay attention to structures that occur on these second charts, as they can be incredibly helpful with peaks and troughs and just understanding where value is within those larger rotations that you see in your 15 to 30 minute or your 3 hour, 9 hour. Again, happy to share this chart as well with you all for you to do with what you'd like. Okay, so now those are your two dynamic charts. And again, these charts are going to help you just, be able to kind of understand where the flow is from day to day. A couple of tips and tricks as well for those that aren't aware. If you click /, it'll open up your indicators, and you can do neat little things. For example, like the fixed volume range profile is a personal favorite of mine, where you can actually take a, so if you want, you can take a range of the day and add a profile to it. As you can see there, that big move down obviously has left behind a lot of excess from a profile standpoint. You can access this in the drawing tools via I believe it is in, sometimes they change these things. Here, it's fixed volume profile under the brush, and you can there add to your favorites, and you can see it will appear there on your dynamic toolbar. Very, very helpful. One other little dynamic tool that I would like to share with you all is the bar patterns. This one can be found also in the brushes, I believe. It is, there we go. This one is in the projection tab. And as you can see here, it's bars pattern. And what you can do is you can literally trace a pattern. It doesn't matter what time frame, and keep it for yourself in case, maybe you see an inversion of that pattern, but this can be a very helpful tip and trick. Okay, so just to take note of time, we're now going to move on to more static charts. These are kind of in between static and dynamic, but mostly static. And this is going to help you with asset allocation understanding and market breadth, and understanding why beta is moving the way it is, if you will. So first, I'm going to give you a little tip here. This website is called etfdb.com. This is a very useful site. It is completely free. What you can do with this website is very simple. So today I'm going to showcase how to take something like the NASDAQ or the S&P 500 and understand what is inside of it, right? So what you can do here is click on the search bar, type in QQQ, because for all of you should know that the QQQ represents the ETF for the NASDAQ. Essentially, when you scroll down, you'll see a bar on the left where you can click holdings. And in the holdings, you will see the asset allocation, the stock allocation, relative to market capitalization. So obviously, Apple is going to be your top weighted. Now, you can do this with all. So I know there's a lot of hype out there about the small caps right now. So you can literally go and do the IWMs. And then again, you're going to be able to do the same thing and monitor what is weighted within that future and ETF. Also, a little note for you all, the US dollar is weighted within the Russell. A lot of people don't know that. The diamonds as well, or known as the Dow, you can see again what is driving that price action. And with earnings season coming around the corner, you can be even more proficient in your understanding of what is creating market flows on a day-to-day. So for example, if UNH comes out with earnings, or Goldman Sachs, and let's say it's Goldman Sachs and you think you should be looking at the banking indexes, you'll actually be looking at the Dow. So this is important to understand. Again, etfdb.com, really easy to use. So what I've done here is, folks, with the QQQs, very simple. I've simply put together a multi-time frame, multi-view chart with the following stocks. As you can see here, we've got the ETF QQQ, We've got Apple, the Microsoft, Google, Amazon, Nvidia, Tesla, and Meta. And just note that you can also create watch lists as you see here. And when you make a watch list, what you can also do, folks, is you can favorite them. And when you favorite them, they will appear with a singular letter here so you can easily access them. So if you see I click here, that's going to be my my S&P, this is the spider. So this is going to show me the same thing, but for the spiders or the S&P. So obviously you've got Bank of America, the heavily weighted there. Now, on that note, folks, just so you're aware before we move on, you can pick the templates and the amount of stock that you want, or the amount of charts that you want, depending on how many stocks you want. And what I also want to note before I move on is you can either keep the time frames the same to understand what the intraday looks like or what the long term looks like, or you can change that here by unchecking interval. And also you wouldn't want to check symbol because you want multiple symbols here. Whereas if you click symbol, you're going to have the same symbol shown here, which can be useful. For example, what you saw here, if I want to look at the S&P, if I want to look at the yen, whatever it is, it'll change that accordingly. Whereas here, if I want to change it, say to something else, I want to be able to keep the other ones. Pretty self-explanatory. Okay, now on to the next tip. So for folks out there that don't know, there's something called the XLs. The XLs are the spider. Again, this is important to understand. The spider ETF allocation. So for those that don't know, what you can do is you can look at all of the products that they have here. And I've done the work for you here, and I will share this chart with you all. But essentially what you can do is you can set up each sector allocated stock within the S&P in a nice, neat view like this. I also recommend that you start color coordinating asset classes so that, for example, if you're looking at the Dow, you see green. If you're looking at the S&P's utility stocks, you see green. Because, you know, if you start associating a color with an asset class or type, your pattern recall and your metacognition is going to be much faster and much more proficient. So again, this is going to be the major weighted XLs. So you've got the XLF, which is the financials. That's going to have your Bank of America, JP Morgan's, Wells Fargo's. You've got XLV, which is your healthcare. That's going to have UNH and more. XLP, that's consumer discretionary, things like Amazon. The list goes on, folks. I leave it to you to research for yourself just because we're trying to keep this neat and short. But nonetheless, I will share this chart with you all and you can use it as you'd like. Now, here's where it plays into the day trading. If I were you all, I would do a bit of a zoom in and have this chart up when you're watching the cash open in the US. And if you see a discrepancy where all of the markets are moving, or all of the ETFs are moving in one directional flow, that's when you can have more conviction behind your futures execution. All right, folks, now we're going to move on to the more advanced charts, which again, I will share with you. This chart here is going to be for the short-term interest traders out there. This is going to be your SOFR view. SOFRs are used to monitor the 3-month duration of bond prices. So they used to be called the Eurodollars. I'm not going to get into the kind of nerdiness of these things, but essentially they are used to price out Fed rate cuts and hikes in the ultra short term. So for those that listen to the squawk while you're trading, you'll often hear the squawk reporting that the market is pricing in or pricing out a certain amount of cuts or hikes. The way that the market prices these things is by its representation of the SOFR for the US Treasury markets. So as you can see here, this label is reading SR3Z25. So this is actually the perceived price of bonds for December of next year, not 2025, because we are now in October of 2024. So what's really interesting about these folks is if I type in SR3 into TradingView, it's going to give me the option to look at the entire strip. Again, this is a more advanced tactic, but one that you need to learn if you want to be a professional day trader. So if you want to look at, for example, what the Fed is looking to do in September of next year, you can do so like this. And as you can see, there's a lot less cutting priced in versus that chart that we were just looking at, which has an entire set of cuts priced in. Because remember, bonds up, yields down, yields up, bonds down. Okay, and I will share this with you, and you can explore that for yourself on the interwebs. Now, this chart will segue nicely from the SOFRs, as this is what I use to monitor the FOMc. Now, for those that are unaware of the difference between nominal and real yields, it's very important that you take a moment and understand this now. So nominal yields are going to be literally what you see on the yields that are trading throughout the day. So when something happens in the market and it's reported that the US 10-year is trading at 4.11, and then in 2 hours it's trading at 4.15, that's a nominal yield that is responding to bond traders and where bond traders are placing those prices in whatever duration, whether it's short term, it could be long term, it could be the long end, right, the 30-year, or it could be the belly, like the 5 and the 7. What's important to understand here is that the real yield is calculated by looking at the real yield, real yield is calculated by looking at nominal yield. So these yields here that are constantly changing based on price minus the inflation rate. Okay, folks. So just to visualize this for you, you can see here on my chat, real yield example calculation. Okay. So as you can see, I'm hovering here on the 4.112. That's where the 10-year is currently trading. So if we take the nominal yield and we subtract it by this here, which is the US inflation rate year over year, the CPI that we get, right? That is going to equal what you see up here, which is 1.712. The calculation on the chat just kind of gives us 1.72, but this is what the actual yield of the bond is on the 10-year adjusted for inflation, okay? This chart is critical in understanding and watching every day. Not so much every day, folks, I'm sorry, more so every few days. Because when you start to see an exit of a certain structure, so right now the real yield is between 0.618 and 1.7. Well, it's recently just broken out, actually, which is important to understand because up until the turn of the quarter into Q4, we hadn't seen a break of that 1.5 yet. So this is a real indication of what the market is pricing in terms of Fed cuts for the rest of the year and going into Deck 25. The Fed funds future, or the Fed funds is obviously what the financing rate is on the Federal Reserve's, the Fed funds rate, pretty self-explanatory. And here you just have what we just spoke about, which is the SOFRs for the Z25. And here you have the ZQs, which the ZQ is another way that you can monitor the Fed funds rate. It's just, it's a bit more defined just by the actual Fed funds rate. It won't change much until the Fed moves. Whereas the SOFR changes, as you can see, more dynamically based on incoming data, day trading arbitrage, etc. Now, in terms of the chart on the right, we have the yield spreads. Now, for those that are still tuning in, I know this is getting dense, unless you're already well versed in this. I hope this is helpful for you, and remember, you can always rewatch this. So what I've done here is I've just squared in on the times that the 10-2 spread, the TUT spread as it's known, has fallen below the negative handle. Now, this is what everybody talks about as the the recession indicator. So whenever this dips below, it's telling us that 10-year rates are moving higher than 2-year rates, meaning that there's more accommodation in the short term, which then leads bond traders to perceive that in the long term, there will be less accommodation, which implies a recession. So what's really interesting is if you look at the recent cycles, so 2008, that's where you got the inversion. 2000, you got the inversion, and 1990, you got the inversion. 1999 through 90 or 95 through 99, the inversion was a little bit kind of slow into the 2000 era, but this one was quite sharp. As you know, there was a lot of talk about the inversion going as deep as it had ever done before, as you can see here on those unseen prices of negative 1.3. which is really interesting in contrast with the real yield, which is trading in exact opposite at 1.7 plus. Now, we've recently come out of that inversion. So it's, again, important to monitor this. And, you know, if you're constantly on your terminal hearing inversion is happening here, you can then refer to that directly in your own view, which I think is very helpful to kind of grow your own trading abilities. The bottom chart here is more so just an indication to see how the curve is functioning. Again, these indicators, again, I thank all my public Pine script writers out there for making these readily available for everyone. But this is a helpful tool because when you see the warning there, it's actually telling you where inversions are occurring, which can be very helpful. So again, folks, I will happily share that with you in the description below. And now the final home stretch, folks. We're going to have a quick chat about forward curves. All right. So this is a discussion for any of my Axia veterans out there who've been watching my streams in the premium and in the blueprint. We've talked a lot about how one can literally use the futures forward market to look ahead as to how the market is pricing the perceived future versus how the sort of media portrays it. So, for example, and a little trick here, folks, if you kind of glide the bottom bar of your TradingView up, you'll get some metrics on your asset class. So with this particular curve here, we're looking at a backwardation that's pretty steep. If you zoom in a little bit more, you can kind of see that there's some backward or some contango that occurs here and there. If you don't know what I'm saying, backwardation is when the forward prices, so meaning, as you can see here, CLJ, that's going to define CL April of Deck 25. So when the forward prices are below the current prices, so you can see that that's trading at 71.30s, whereas currently today on the Z, so the December contract, which is 1 month ahead of where we're at, is trading at 73. So that is a contango right there. Excuse me, a backwardation. If it was the other way around and these prices were trading at, say, 75, 78, that would be a contango. Now, it's not that it's guaranteed that those prices are going to keep elevating in the forward if we're in a contango, or they're going to keep dropping if we're in a backwardation. But more often than not, they are critical tools to watch, especially when there's a context around the narrative. So, for example, context is king with disinflation, right? So if you looked at, for example, and let me just pull this up. I have a chart here that I will also share with you. And this is a lesser watched asset class, but I think a critical one nonetheless, especially with the inflation disinflation narrative. This is the wheat spread and the soybean spread. Now, when looking at this curve, let me just pull this up, put ZS there, soybean, or sorry, don't keep that as wheat. Just pull this up. There you go. So as you can see here, we're now actually in a contango. Now, what's really interesting, folks, is about, I want to say 24 months ago, this curve was very much in a backwardation, just like we're seeing oil. And prices were higher and they moved lower as inflation was dropping and as disinflation was progressing. So again, not a trade recommendation, but just an awareness. As these prices shift to contango, I am more mindful of how that perceived understanding of inflation might change. So if suddenly the financial media starts going, inflation is not in control and we're seeing a consideration that the Fed needs to stop cutting, I won't be surprised, considering that inflationary markets like food prices are pricing in higher inflated prices, right? All right, folks, that's a lot to pack into one 30-minute session. I said 15 minutes, but it's actually 30 minutes now, but that's all right. Hopefully this was helpful for you all. Again, look in the description below for these charts available to you. And for those that are not a part of our premium channel, I do recommend that you sign up and join so that you can watch us, myself and Richard, discuss these things on a day-to-day basis, and you can follow along with the charts that we give you. All right, folks, thanks very much for tuning in, and we'll catch you on the next one. Cheers.